Speaking of risk, how do you manage your risk in your trades? What steps do you take to minimize potential losses?
So number one, there's a couple things, and these are must-dos, because when I started to do these things, everything changed in my trading. Number one, position size. So in my first years when I had a small account, it was all about putting all my money in one trade. Worst decision I ever made. I'd make some really great trades, think I was the best trader in the world, and then I'd blow myself up, lose 90% of my account, and have to start from scratch again. Position size enables you to weather losses while consistently learning and gaining confidence and making money. Number two, when I buy now, I never go in my full position. So let's just say you have a $100,000 account. Let's say I want to put 10% in a position, so I want to put 10,000 in. I'm not going to put all 10,000 in at the first level. That's what I would have done in the past, and that was thinking that, hey, I can't be wrong. I'm going to find this. Here's a technical level. This has to be right. The best decision I ever made, what I learned, is to assume going into a trade you might be wrong. What that does is it makes you more careful. It makes you only put a portion of that money at risk, leaving yourself the ability to dollar cost average. Dollar cost averaging in when something goes against you, as long as your thesis holds true, is amazingly profitable. And again, for me, it upped my win rate well north of 80% once I started to do that. And again, has been a game changer for me.
So your general advice for risk management would be to determine your position size ahead of time, take a step, wait for confirmation, and then continue accordingly?
Yeah, exactly. So it's very key, and you said it just right, is that you have to go into the trades with a careful eye. You have to go in not thinking that you're a genius, that you found the next big thing. Instead, go in slowly, kind of dip your toe in the water, and that's a way to mitigate and be able to trade around your positions. And then always, as always, you have to understand going in, if this trade does go against me, there are two times you get out. Number one is if your thesis fails. So if anyone out there had to stand up in front of a board of top traders, they have to give that thesis, and the top traders would have to agree and say, yes, that's a valid reason. That's a valid reason. Okay, that trade makes sense. If all of a sudden the reasons you got in that trade are no longer valid, cut that trade right away, move on to the next trade. The other thing would be is if it ever hits a max level where your comfort zone says, okay, I need to get out of this trade because it's hit X amount of dollars loss. All right, people that stay in, they're going to get more and more emotional if it's too much, if it's too big of a loss. And that, again, is a no-no for investors.